Welcome back to the Commstock channel. My name is Brianne Hendrickson. Today I have Joe Camp with us. Welcome.
Thanks. Good afternoon. Report day afternoon here.
You've been kind of busy. Very busy actually. But like you said, crop report came out today. But there's some other things that we need to hit on before we get into the depth of that. Let's start with the conflict in the Middle East and what kind of influences that is having on the oil and the dollar.
Right. Today, oil rebounded initially overnight, and that was something that helped the soy complex move higher as well. We, of course, talk about risk premium entering the energy market because of the Middle East, and how closely they're involved with oil production and exports. Talking about the attack, I think now 6 days ago on Israel, and upping the risk of a further escalation of conflicts with Iran, one of the world's biggest oil producers, questions about Saudi Arabia, the leader of OPEC there, and what will happen going forward. So that initial bump on the oil helped soybeans, but then there was still some nervousness creeping in about what's going on with the economy as a whole. That involved the latest consumer price index report, where inflation was a little bit hotter than anticipated again, up 3.7% at an annualized rate over last year. We think about the Federal Reserve looking for a target of inflation at around 2%. So that kind of fueled the idea that the Federal Reserve, the central bank, still going to be hawkish on interest rates and keeping them higher for longer. That's something that boosts the dollar, and did again today. The dollar index up sharply. The dollar also rises when you have these geopolitical risks like we talked about here with the conflict in the Middle East. So those moving parts were something we had to pay attention to early on this morning. We separated that focus when we got the crop report out, but it'll be something, again, we have to deal with going forward. We'll keep an eye on those developments.
Did you kind of see, yes, you said it affected the market, but with the crop report coming out, yeah, we kind of shifted for a minute, but will they kind of come hand in hand, do you think?
Yeah, they will. We'll talk about potential follow through for these grain markets price wise, and how we were left at some really critical levels, particularly with resistance. And part of the determining factor of whether or not we can keep going higher is going to be whether or not we have some stability for these outside markets. I would think if oil continues higher, if we get a bit of a calming influence from the dollar, if the stocks can rebound again along with treasuries, then we could expect support for continued upside on this grain market. If we have continued fallout, then it almost doesn't matter that we had a bullish report reaction today. It's going to be something that gets in the way of the grains.
So let's completely switch over to that crop report. A lot of anticipation. What kind of reaction did it produce? From farmers to even the market.
Yeah, the first reaction was initially bullish, and it followed through to finish bullish here, and we'll talk about the reasons why. The first glance, usually on these reports, and so true with this one too, was given to the yield estimates. They were subject to revision on this report. The USDA analysts actually had some field samples to work with here on this October update, and it allowed these yields to go lower and to come in under what the average trade guesses were. When we could see the domestic production numbers, they include the corn yield average for the nation was 173 bushels per acre. That was a couple of tenths below the average trade guess. It was back below where we were at a year ago. The soybean yield came down to match last year, but it too was below the average trade guess by 0.3 of a bushel. And that was supportive, because when it yield carries through to the ending stocks estimates, that's something that also supported lower than expected numbers at the end of the day. So ending stocks for corn, still comfortable, you could call them, at just over 2.2 billion bushels. Soybeans, though, awfully tight and not moving up any from last month at 220 million bushels. And so overall, the outcome was bullish. We can look at the other results here, including the global estimates. Those by and large were friendly because for all three of them, the major contracts here, corn, soybeans, and wheat, global ending stocks were projected lower where the average trade guesses were coming into this report. So that's friendly. Overall, you look going forward, and we feel like these numbers are something that clear the way for a more bullish transition back to what we'd normally expect to be some seasonal upside for these markets around this time of the year. Now, this October report's important because it comes at a time when the corn and soybean harvests are passing the 50% mark. We're more than halfway complete. Next report will likely be all but wrapped up on harvest. And so this is the time when we can start to mark out these seasonal fall harvest, whatever you want to call them, lows. And this report, just simply in part that it wasn't outright bearish, allows us to have more confidence in that timing. So all in all, a bullish reaction here. We're looking at some of the various state by state numbers. Of note would be like Iowa. Their soybean yield was unchanged from last month, still very strong at 58 bushels per acre. Illinois, the corn yield actually went up 2 bushels per acre to 200 bushels per acre, but it was more than offset by lower yields in states like Nebraska, which led the way lower in terms of reduced production with their lower yield, and with Kansas, they were a big revision lower, both on corn and soybean yields here on this report. So that's something still we're going to sift through and wonder if it affects this next report. But ultimately, we've got what we thought we could see, which are lower yield estimates on this report. And that's the friendly outcome that we have observed, at least for now, on these prices.
So where do we kind of go from here?
We start with tomorrow's follow-through trade, or is it a follow-through or a give-back day? In part, again, that is going to be determined by the support or the environment of outside markets and whether or not that dollar is going to continue to scream higher. Because if we look at the charts here, starting with December corn chart, the remarkable part is that we finished with a high that was a penny and a quarter below $5. $5 is obviously an important mark here. Psychologically, it's important. It's just generally a point where there's going to be some offers stacked up with willing sellers, not only from the technical or the speculative side, but for farmers too, that say, if we can get back futures above $5, I'll sell a little bit of this new crop. It's a very similar look for the soybean chart. We show that the end of the day here for November soybeans is right on this blue line, which is the 20-day moving average, and that splits those lower and upper Bollinger Bands, which are a couple standard deviations away from that 20-day moving average. And so we're potentially back into the middle of this range that we've been in. And if we can build support now from that 20-day moving average, then we've potentially got further upside from here. But like corn, we stopped just short, actually a quarter of a cent short of $13 even for November soybeans. And so that's where we go from here, is wherever these technicals allow us, for one. And that's very much going to be something determined in part by tomorrow's action. Finally, we get a Friday to trade after one of these reports. There's been so many Friday crop reports here lately that we just get the report and then have to go into the weekend. But a very crucial trade set up into the weekend tomorrow.
So let's kind of backtrack a little to harvest and harvesting progress and kind of that weather.
Yeah, that's also where we go from here, back to monitoring the progress of harvest. We look ahead into the weekend, maybe a few days of spotty showers across parts of the country to disrupt harvest, but no real alarm. We had the latest update show us that we were ahead of pace on harvest for both corn and soybeans, at least compared to the 5-year averages. So we get on into the 2-week outlook, and we show that in an outlook map for the 8 to 14 day time frame. It's drier than normal across most of the country. We should really be picking up harvest here going forward again after a potentially just brief disruption. That just goes back, we should note, to what we're talking about with these seasonal tendencies, that there's all indications that we're about to put these crops away here pretty quickly. And then it's going to be up to the buyers to get this inventory out of the farmers' hands. And that's why sometimes, and why it fits with this year too, we believe we can have some higher prices once we get past this first half of October.
And as we kind of talk about weather, we also need to talk about the not so pretty El Nino and that monitoring system. How's that looking?
Well, El Nino, we're going to wonder if it is the cause for a really wet and disruptive, nasty winter here in the U.S. like it can be, but it could be a wet winter that recharges soil moisture, as is much needed across a lot of the country. We talk about low river levels and the need just simply for a better start for this next season in the coming spring. But right away, it becomes an important focus as we shift away from our harvest and think a lot more about crops growing abroad, particularly in the southern hemisphere, right, where it's the flip of our ongoing fall season. There we are just getting started for planting, across parts of South America. I know our President Matthew Cruz gave us the update from Brazil here on yesterday's podcast, and we're keying in on some of those concerns that were brought up about dryness in northern Brazil, dryness extending into parts of Argentina, flooding and too wet in the middle of those two. And so that's something that could potentially also support prices from here if there are further worries about El Nino being a problem for crop production. It's already very much a crop production issue for a country like Australia, which saw its wheat production cut again today. They're going to be down at least a third from where they were in terms of wheat production last year. So that's where we go from here. We think still about weather, going forward, not just necessarily what's going on here, but certainly about how conditions are abroad.
So as we wrap up, the question that I'm sure you don't like me asking, how do you feel about the crop report overall?
Well, finally, a more bullish leaning here. Not that we're necessarily biased on looking for prices to go one way up or down, but it was the expectation, long coming into this report, that the USDA seemed too high on their yields, unfortunately, because of what we had heard from our customers, from farmers that had struggled through lots of this season. Now, it's a good thing that we're hearing from them again, like all these yield reports we're sharing, and a lot of them saying, well, it's better than I feared, at least, is how I'd say. But it wasn't up there with a year ago on corn. We saw that proved out today in the reduction for the national estimate. And so that's at least some justification, too, for the outlook that we've had in markets in trying to overall encourage patience at this time on corn and soybean sales.
All right, that'll do it for this episode. Thanks so much.
Thanks so much.
For premium content, you can head over to the Commstock Report. And don't forget to hit that subscribe button.